Right. Hello, everyone, and welcome to our latest Alta Insights webinar. I'm Jeremy Yohe, Alta's Vice President of Communications, and today we have a great presentation lined up to discuss the Office of Foreign Assets control requirements and how to spot money laundering red flags. Before starting, as you know, if you've attended our webinars before, we just have a few housekeeping items to touch on. All of our webinars are recorded. You'll get an email with a link to the recording tomorrow, and you can always access all of our webinar recordings at alta.org/webinars. We will hold some time at the end for Q&A, so if you do have any questions, submit them in the questions box. We do need to thank Certified for sponsoring today's Alta Insights presentation. And before introducing today's speaker, let me share a short commercial from Certified.
I couldn't be more thrilled that we signed up with Certified. It's amazing. It's an amazing product.
I am grateful every single month when I look at what we're spending to do this and the level of protection we're provided and the number of situations we have already thwarted by using this process and being with Certified. It was a no-brainer for us once we started seeing those direct results.
All right. Well, thank you, Certified, for that message, and thank you for your solution to help our members try and prevent wire fraud. Different lane than what we're going to talk about today, but definitely a threat that our members face every day to protect money involved in the transaction. With that, we'll transition and introduce today's speaker. Joining us today, we're fortunate to have Michael Parker. Michael is counsel and head of anti-money laundering and sanctions practice for the law firm Ferrari and Associates. Mike is a former federal prosecutor with the U.S. Department of Justice's Money Laundering and Asset Recovery section. And prior to his time at the DOJ, he spent nearly 8 years at the U.S. Department of the Treasury's Office of Foreign Assets Control, where he served as the sanctions investigator and later a section chief in OFAC's enforcement division. So maybe Mike, you'll be able to share a few war stories during your presentation today. And with that, I'll give you the keys to the car, being the Ferrari law firm. So we'll see where you take us.
There you go. Thank you, Jeremy, and thank you, everyone. Really appreciate being here. Certainly a timely topic, one that has been in the news quite often as of late. And so really what we're going to discuss today are kind of a general overview of economic sanctions and money laundering, and then really what is that application to real estate in general. My goal here is to make this relevant for you. If we have a little bit of fun, tell some stories, maybe some more stories involving real estate, we're all the better for it. But really, if you take away just, I guess, two really key aspects of kind of this presentation, the first one is knowing who you are doing business with. The who, out of the who, what, where, when, why, could not be more important. A lot of sanctions risk, a lot of money laundering risk, a lot of just general risk in general comes down to knowing or not knowing who it is that you're transacting with, who is buying property, and then the second big question is why. not just why are they buying property, but why are they making a purchase in the way in which the purchase is structured. So just to kind of set the table a little bit, when we're talking about themes such as money laundering and economic sanctions, what exactly are we talking about? I could probably give a several hours long presentation on sanctions in general, and none of us would still be any clearer of exactly what it is I'm talking about. And so I really want to break this down into a very general sort of sense of what and who we are talking about when we are talking about economic sanctions. Obviously the programs targeting Russia have been most notable in the news as of late, but there really are sanctions programs across the board that target a number of actors, countries, and really depending on the actor or depending on the country, you could be implicating different sanctions authorities. At their most basic, economic sanctions are the US's foreign policy tool to exclude certain actors from the US economy and block all of their assets that are within the US economy. It also becomes illegal for US persons in a general sense to do any sort of business with these people. And so, they are actually put on a physical blacklist. It's called the Specially Designated Nationals List. And so this really kind of gets to that very first point that I was trying to illustrate of the who. Who are you doing business with? If you are dealing with someone who is on this list, on the Specially Designated Nationals List, a foreign person, generally speaking, you cannot do any sort of business with them. You cannot provide them services. Really, you have to stop the transaction right then and there. I think most of the participants here have a level of sophistication of understanding that. Really, just from a theoretical standpoint, knowing that there are people out there with whom no US person can do business with, really it sort of stands to reason. Those are sort of at the heart of the economic sanctions. There are certain countries which, people within the United States cannot do any sort of business with, Iran being one of them, Cuba, of course, really certain actors within Venezuela, North Korea. One cannot touch anything involving North Korea, really. So these are kind of almost the easier areas in which economic sanctions could apply. You can't do business with somebody who is on the economic blacklist, the Specially Designated Nationals List. You can't sell a house or buy a house from somebody who is in North Korea. Pretty simple and plain and dry. When we start to get over into the red flags and we start to get into the money laundering conversation writ large, this is where it becomes more complicated. This is where, we start talking about shell companies and nominee directors. This is where we start talking about straw purchasers. And this is where we really start talking about sophisticated actors within these sort of spheres that set up these Baroque structures specifically to hide who it is that's purchasing or selling a property, who may actually be using it, who is the ultimate beneficial owner who is sitting on the other side of a real estate transaction. That's where it becomes much more difficult. And so when I'm talking about money laundering, it's a very broad sort of topic in which we're going to discuss today. Broken down to its simplest form, sort of notwithstanding how it is defined within the U.S. federal statute, but in its simplest form, you can think of it as being a triangle. At the very top, you have a crime, and at the bottom, you have a criminal, and you have an asset that is derived from that crime. The purpose of money laundering really is to sort of break the chains between the crime, the criminal, and the asset, thereby sort of cleaning it. There's a more traditional definition that talks about integration, placement, layering. I don't think really that that's a very useful definition personally. I think really at its most basic, what we're talking about is separating the crime from the criminal, separating the criminal from the asset, separating the asset from the crime. If you can break any one of these sort of chains, then one can take illicit funds and thereby introduce them into the formal economy, put them into use such that they can purchase a property, or the purchase of a property becomes a way of laundering money, or it hides sort of the fact that somebody is a sanctioned party, and enables them to perhaps buy property within the United States where they couldn't otherwise. And so really, we're going to talk a lot about methodologies that really speak to those types of activities and what you should be on the lookout for, again, in a very broad and general sense, insofar as how real estate can play a key role in helping criminals to launder their funds, in helping people to mask what would otherwise be an illicit transaction, of helping people sort of hide the fact that whatever assets that they have that they're using are derived from a crime, or hiding the fact that the criminal in question is committing a crime, or that the criminal is attached to that specific asset. And so I'm going to cover two different topics that are a little bit kind of further afield here, but then that definitely sort of work their way in overall into these red flags. The first are the global targeting orders. Now, of course, the global targeting orders really are issued by the Financial Crimes Enforcement Network, or FinCEN. It's another part of the U.S. Department of the Treasury. And these are specific restrictions for types of real estate transactions that occur within certain geographic locations. And so these apply to all cash purchases of residential real estate in certain metropolitan areas that reach a certain threshold. And I'm not going to go through every single location, but in general, you have the major metropolitan areas of the United States, along with Hawaii, along with Baltimore. You know, you've got Boston, you've got Chicago, you've got Los Angeles, you've got New York, you've got Las Vegas. And really what this is meant to do is to flesh out and require that the identity of the natural persons behind any purchasing companies making all cash purchases of residential real estate are fleshed out and determined before that transaction takes place. So this, you know, it's very broad, but at the same time, it doesn't cover everywhere in the United States. It doesn't cover all types of real estate transactions. And so if you're dealing sort of within those specific geographic locations, you certainly want to be aware of global targeting orders. This is not an ask, it is a demand. So it is something that you are required to do. But really, you know, looking further afield, what the global targeting orders attempt to suss out is something that should be a red flag regardless of where your real estate transaction is taking place. And we'll get into that in a little more detail a bit later on, but I do want to flag that, you know, the global targeting orders are requirements. Some of what we're talking about is more, you know, things that you really should be doing so that you don't get jammed up later on. And also, not for nothing, things that you should be doing so that a global targeting order doesn't necessarily apply to your geographic location, because people are doing the right thing, they're asking the right questions. This isn't a problem because professionals have made sure that illicit finance is not a part of the real estate community writ large. And so there is some self-interest involved in this, in, you know, not just complying to the letter of the law, but also making sure that the US government doesn't have a reason to go after your particular geographic location. And the second thing I'm just going to cover in very broad strokes is the Bank Secrecy Act. And when we're talking about the BSA, you know, a lot of times banks understand this. Banks have sort of a fundamental awareness of what it is that they have to report, all of their different regulatory requirements. But it may be a little bit more new within the real estate sort of sector writ large. Now, obviously, mortgage brokers, mortgage bankers, they are required to report suspicious activity under the BSA. There are certain cash reporting requirements that are covered by it. But these really, you know, by and large, are going to apply to real estate transactions involving a loan, involving some sort of mortgage, involving money that is loaned for that purchase. And so, you know, between the global targeting orders with cash only transactions made by shell companies in certain locales within the United States, and then the BSA sort of covering, you know, mortgages and what's reported under, you know, under the BSA if a mortgage is involved in this, if a mortgage is issued, there is a wide degree of sort of uncovered activity, as we'll call it, and that's kind of where the criminals are going to, that's where they're going to target, and that's what we're really going to cover today, because I don't think anybody involved in this wants to be a subject, not necessarily a target, but a subject or a witness to a major federal investigation involving real estate transactions that you were a part of. So a large part of what it is that, you know, our analysis, it's going to be fact specific. You know, all of the right questions that one would just ask as a matter of course. You know, what is the value of the home? What is the value of the mortgage? Who is paying for the down payment? Who is taking out the mortgage? Are they different? These are really basic questions that sort of sit at the heart kind of at the analysis and really suss out who it is that's buying it and why it is they're purchasing it and in what way. And so the number one red flag, really, I've seen this in more money laundering investigations, more illicit finance investigations, more sanctions evasion investigations than really I care to say, are the use of offshore shell companies, offshore corporate structures. The design of these are to obscure who it is that's behind a transaction. And so, oftentimes you have sort of incorporation companies that sit outside of the United States that will put together some sort of corporate or trust entity that will hold nominee directors, for instance. And this isn't just offshore. Keep in mind, this is also within the United States. The recent Pandora Papers disclosure really showed how trust vehicles, in certain US states are also being used to obscure ultimate beneficial ownership. But the number one thing is who is behind this? Who is benefiting from this transaction? Who is pulling the marionette strings, if you will? And so, to the extent that you can kind of unwind the different structures and layers of corporate structuring, to find out who it is that's actually behind a transaction, that is going to be the key analysis here. And so if you see, kind of a British Virgin Island company that is owned by a Panamanian trust that suddenly wants to buy, 5 different properties scattered across the United States, you may want to take a step back and say, ask those 2 questions. Well, who's actually doing it? And why have they set this up in such a manner? And I will tell one story very quickly, because this isn't all just used, to commit crime. There could be a very legitimate answer for this. There's a well-known actress who was haunted by the paparazzi, a non-US person. This person actually went to a Panamanian law firm, it turned out, that had made news back in 2016. And it turned out that some properties that perhaps were purchased on her behalf were made by shell companies. Well, the perfectly legitimate reason was because, this person didn't want the paparazzi coming around her residence. And so, put it in the name of a couple of shell companies that she controlled. This is a perfectly legitimate reason to use an offshore structure to hide one's actual ownership over a property. So just because you're seeing this doesn't necessarily mean that a crime is taking place. But again, that gets to that second big question. Why are they doing it? Not everyone who uses offshore corporate vehicles to hide their actual ownership of an asset are world famous actresses being hunted down by the paparazzi. If I myself were doing it, I'm sure, that would raise some red flags because there's nobody, trying to take my picture. That may apply to a lot of the customers that you're talking about. And so really look behind the curtain, if you will. Are there nominee directors? In certain instances, you would see the same directors for thousands upon thousands of companies registered in these offshore jurisdictions. This is absolutely a red flag that these are professional nominees that simply lend their name to corporate control over an entity, and you're not necessarily really having any effective actual corporate control. That really this is used to obscure the beneficial ownership. Another red flag, along with the offshore shell companies, and these kind of work hand in glove, as I've alluded to, are the heavy existence of trusts or foundations. If you have a string of shell companies that are then held in a trust, which is then owned by another offshore company, this is layer upon layer upon layer to mask who is actually controlling these corporate entities. And so you must be wary of that, regardless of whether or not a global targeting order applies, because these raise several red flags. The more layers that you have, the more the question becomes, why is this so necessary just to purchase a residential condo, in a location in Florida that isn't necessarily covered by the GTO, by the global targeting order? So really, that's something else. Also, and I've seen this a lot with offshore sort of finance, if there is money coming in from multiple jurisdictions that don't necessarily connect with where these offshore corporate entities are incorporated, that's also something that you're going to want to take note of, because the money coming in from a bunch of different locations, I mean, this could be some sort of pooling mechanism. This could be essentially some form of rinsing these different wire transfers and bringing them all together for the purchase of one piece of real estate. So very much related to offshore finance, we've got straw purchasers. And this is when somebody basically acts on somebody else's behalf. So, someone buys a property and nominally on paper it's theirs, but really it's on behalf of somebody else who is controlling it. With sanctions evasion, this can be very nefarious. And so what are some red flags to sort of maybe look out for in general, that somebody who is not necessarily the person that is going to own the house is actually purchasing it? Well, for one, knowing their assets, if they have an online profile, if someone has enough money to purchase, a $12 million luxury apartment, it's very likely that they're going to have some sort of online presence. And so just sort of seeing if that kind of matches up. I mean, that's not always going to be the case, but understanding the asset profile, even if it's a cash transaction, you're going to want to know, was there a sudden influx in cash for this person? Did somebody else wire them the money to make this purchase because maybe they were hot, they were under some sort of suspicion? Or in the worst case scenario, is a specially designated national, is a sanctioned person, somebody in a sanctioned country, or somebody who's actually in the SDN list, using somebody else to make what looks like an innocent purchase on their behalf? And this is certainly something you would want to look out for. And so, if you have somebody who, by all intents and purposes, looks like they make a salary, that's $50,000, $60,000 a year, and suddenly they're buying a $12 million luxury apartment, that should absolutely be a red flag, regardless of whether or not they could make that in cash, and regardless of whether or not there's a global targeting order or there's some other indicia. This should be something where, the red flags go off and you should ask greater questions, because what you don't know will hurt you in these instances. So the next sort of, I guess, red flag. This can get a little tricky, even for money laundering professionals, anti-money laundering professionals, and that's manipulating the appraised value of the property. This can be a really sneaky way to sort of slide in illicit funds to a transaction without necessarily triggering too many red flags. So what do I mean? So say you have a $12 million property, something that perhaps reasonably would appraise for that amount or has appraised for that amount. And say the purchase price is set below that, not to an obnoxious degree, but maybe just 11.5. So that $500,000 delta between the sale price and the appraised, either real appraised or anticipated appraised value, that $500,000 could actually be for some sort of illicit value transfer, such that it would not sort of trigger any red flags. It's a big enough real estate purchase to where it would kind of slide under the radar. But this would be kind of a really interesting, as well as sneaky way of, and it does happen quite often, of putting in illicit value into the structure of a real estate transaction without raising as many red flags as the previous two sort of examples. So really be on guard for, what is the value of this property? Is there a reason why it's being sold perhaps under what the market would say that it is? And who are these two parties then that are making this transaction? This is very important as well. Because that $500,000, if that transaction goes through, that $500,000 has effectively now been laundered. That's an illicit transfer of value just based on the real estate transaction. So the next red flag is the payment coming through an intermediary, such as a lawyer or an accountant. The down payment, the mortgage, the cash purchase. This is going to be a little bit different than a straw purchase. It's certainly going to be different than using offshore corporate vehicles. This is kind of a way to use someone in a profession of trust to basically whitewash what would otherwise perhaps be an illicit purchase. And so if you have basically someone buying, making a real estate purchase, and the funds are not coming from their personal bank account or some sort of corporate account that is in their name that's very clearly identified with them, but instead is coming from a professional that they've hired, that could be a carve out. This could be a carve out transaction. It could be a way in which the lawyer or the accountant uses clean funds to pay for that property and then settles up with the client using illicit funds on the back end. So that's something else to be careful of. That's not saying that every single one of these transactions is criminal. There are perfectly legitimate reasons to do this. I have to laugh when I say, not all lawyers and accountants are crooks. I hope you believe that in your heart of hearts. I certainly do. But it is to say that there are some out there that are gatekeepers that use their position of public trust to help further the cause of the criminals as opposed to further the cause of justice or applying the law. And so that is something else you're going to be wary of. Again, these questions: who is doing it? Why are they doing this? Perfectly legitimate explanation, great. But you need to ask that question: why is this taking place? Also, another red flag: cashless exchanges or gift exchanges. And I'm sure that all of you are kind of wary about this. It's very obvious, if you've got a family member or, a parent, child type relationship, or if very clearly on paper, there's a reason why a gift of real estate is being given, a charitable donation, any number of very legitimate reasons why a sale and purchase would not be taking place with a given real estate transaction. But if it isn't altogether obvious, and even if it is, it may be worth asking the question of what's happening here. Why is this particular piece of real estate being transferred without cash? Who is it being transferred from or to? And in my war stories, I am going to give an example of this where to great effect outside of the United States, cashless real estate transactions basically were at the heart of a major money laundering scheme. And so moving along, I just want to go over once again kind of these key questions, right? We did the who, what, where, when, and why, but I do want to cover these again. Who? Ultimate beneficial ownership. Who ultimately is purchasing this property? Who will ultimately own this property? Who is behind sort of the corporate structure, if there is a corporate structure, buying this property? We really need to ask that question. And then why? Both as to why that person or that corporate entity is purchasing the real estate in question, but also why are they buying it in this way? Is it really necessary for 5 different trusts to hold different offshore vehicles that pool their money together and then buy a luxury apartment? We need to be asking that question at every step of the way. Why is the transaction happening in the way that it is? Is this to hide or to protect a privacy interest, or is it to hide something more nefarious? Is it meant to launder funds? Is it meant to hide the fact that a sanctioned person is actually behind this real estate transaction? And we need to be checking that. And for checking, the specially designated nationals list, there actually is a lookup that you can use. So I would encourage all of you to definitely, sort of screen those names to the extent that you're not on any of your transactions. Google can be your best friend in this, but also the SDN search. If you're on the Treasury Department's website, you can screen names manually against the specially designated nationals list and see if any of those names pop up. And if there are any partial hits, you may want to seek counsel. You may want to ask some more questions over whether or not this could be an actual hit, over whether or not this could be a sanctioned entity or individual. And so really, it comes down to knowing your customer, doing the right due diligence beyond just what is required by a global targeting order or under the Bank Secrecy Act. But it's really taking a vested interest in, understanding the transaction from the various sides and knowing who the parties are that are, exchanging something that's very significant, that could be a huge transfer of value, either legitimate or in some cases illicit. Where, does a global targeting order apply? Is this type of transaction from a foreign national maybe typical within this region? Is there a reason that someone who never travels to the United States is now purchasing property, millions of dollars worth of property in Ohio? When? Here we go. Were new sanctions programs just put into place? All of a sudden, certain wealthy individuals from the Caucasus region are designated and sanctioned, is there an influx of money into the real estate sector of New York? I mean, these are questions that you have to ask. What is the timing like on this? Are folks using the United States, and particularly using real estate as a way to sort of maybe hide or offload their wealth in certain jurisdictions, or hiding it within the United States? I'm not the first person to say this. Criminals throughout the world, sanctioned individuals throughout the world, even, the United States is still viewed as a very safe place to store money. I'm not sure with law enforcement action over the last 5 to 10 years whether or not that's still true, but during my time at DOJ, it still was basically held out as a truism that if you could get your money into the United States, it was a much safer place to be than certain other countries. We have great legal protections. Obviously, our property rights are, some of the darlings of the world. And so really, from a non-law enforcement standpoint, there are plenty of motivating factors for somebody to want to park their assets here in the United States. And the best case scenario for them, which makes it harder for all of us, is if they can have it in someone else's name, if they can have it hidden, if it can accrue value and wealth perhaps, while at the same time being shielded from any negative consequences of it being either derived from an illicit act or being or pertaining to a sanctioned actor. So really, these are things that we want to look out for. And then what? Is this a residential property? Is it land? Is it commercial real estate? I mean, all of this is going to factor in as well in your overall analysis in asking, does this transaction make sense? As a professional, having seen all of these, does this make sense? So really, use all of the skills that you have, all of your training and experience to really try to unwind this and ask these basic questions of, who is making this purchase? Why are they making it? And are there any sort of indicators that maybe this isn't as above board as it may seem? Okay. All right, so I have a few case studies. I went over the case study of the unnamed actress who purchased real estate in a foreign country by way of a corporate entity, several corporate entities actually, so that it would not sort of alert the paparazzi, so that the purchase, the sale. I have basically the same fact pattern. All of that happened, except it was South Florida, and it was a designated Venezuelan government official. And so this sort of highlights where, these tools, they are just that. They are tools to be able to make purchases, and shield, provide anonymity, and sometimes that's good, and sometimes that can be criminal in nature. And so you will be harmed by the questions you're not asking. The one transaction, this was really interesting, involving real estate, this was a foreign country. I'm not going to say which one. Early on in my experience at the Office of Foreign Assets Control, the group within the U.S. Department of the Treasury that administers and enforces the U.S. economic sanctions programs, I focused on counter narcotics, and really specifically a couple of major cartels. And I was taking a first-time trip to a Latin American country, and I was with the Drug Enforcement Administration, and they were basically giving me a lesson on how a lot of illicit finance worked and why it was so difficult to stop. And one of the real big takeaways is they pointed to a number of really high-end, we were in a nice part of town, really high-end apartment buildings. I mean, just glittering and beautiful, and easily looked like, anything you'd see in South Florida, anything that, you would see in really, just throughout the United States, just in the high-end luxury market. And, the agent that I was with pointed them out and asked me, hey, do you notice how the lights are dark in just about every single one of these apartments? It was getting towards dusk, so that definitely was kind of a little odd now that I think of it. And, I said, oh, yeah, actually, now that you mention it, why, it's a residential apartment building. Why on earth would people not be turning on their lights when it's getting a little dark? He pointed it out and he said, all of these, nobody lives here. These are used as chits between various traffickers and various organizations, and particularly between the wholesalers and the traffickers, the people basically producing the drugs, so people that are making cocaine, and then moving it to certain parts in Latin America, and then trading it off with the traffickers who will then sort of move it up into the United States. A lot of these apartments are just basically chits that are being used to buy and sell different loads coming across. They're not really used for people to live in. Basically, all that happens, we've got intel on this. A document's notarized, and then all of a sudden, the one person's straw purchaser transfers the property to another trafficker's straw purchaser, somebody acting on their behalf. And that is how a load of cocaine, a major load of cocaine, is paid for along the route. And it was kind of mind blowing, because this sort of activity, it would be very hard to stop. I mean, you don't have money changing hands. You don't have sort of the typical gatekeepers. What's happening here is the real estate is the means of transmitting value from one side of the cartel, from the production operation side, to the trafficking side of the cartel. And that's how the value was exchanged. Real estate sort of stood in as cash, has stood in as any means of transmitting value. And so I highlight that example, not that it would necessarily happen in the United States, but just how kind of easy it could be, especially with a cashless exchange. Since you're dealing with such large amounts of money, such a major transaction, the step between it being a legitimate transaction and hiding some sort of illicit value, hiding some sort of actor's involvement in the transaction, it's very easy within the real estate sector. And seeing this in other contexts, it sort of underscores the point that we have to be vigilant, that this is a sector that can be abused, and it's dependent on professionals asking the right questions and digging beneath the surface, recognizing these red flags, to really make sure that this isn't sort of a rife industry just for money laundering and whatnot. I think that is going to be it as far as sort of case studies and examples. I did want to leave open plenty of time for questions and answers, just so you don't hear me talking this entire time, and maybe I could focus on something for some of the time that we have remaining that may be more germane, I guess, besides sort of this broad take of everything. But Jeremy, I do want to thank you. I want to thank all the Alta members. This was a lot of fun. And appreciate you having me on.
All right, yeah, great, Mike. Great information and run through of the red flags and the case study on the drug cartel. Kind of scary stuff. You'd be happy to know that pretty much every year the page on Alta's website to access the Treasury's blocked persons list is always one of the top visited pages each year. So
love it.
Definitely doing the due diligence there to see if any of the people and the transactions are on the blocked list. As Mike mentioned, we do have some time left for Q&A. So if you have a question you'd like to pitch over to them, submit them in the questions box, and we'll hang out for 10 or 15 minutes. If we don't have too many questions, well, I guess everyone will get back to work. Got a question that came in from Allie. Personal question: how did you get started in your career, and why money laundering?
Oh wow, we only have 10 or 15 minutes now. So right out of undergrad, I have a background actually in foreign policy before I even went into law. My undergraduate degree is in international politics, and straight out of undergrad, I decided to kind of travel abroad a little bit, and I landed in Mexico City in 2005, and I worked in the nonprofit sector for a little bit of time. Oddly and unbeknownst to myself, I developed sort of a knowledge base on how businesses are incorporated in the Mexican civil law system, what you sort of have to go through, the incorporation documents, how civil law works, and how businesses are constituted. And so when I came back to the United States, I'm originally from the DC area. I had a friend that was working at OFAC, and we just got to talking one night. I was kind of, I was between opportunities, basically, so to speak. And the more that this person was talking about some of the work that they did, the more interesting it sounded. I mentioned, hey, you know, I speak fluent Spanish and I kind of understand how businesses are structured down there. So one thing led to another. And, you know, this really was before a time that OFAC was really as big as it is now. So 2005, and especially the narcotics trafficking programs, they still were kind of in their infancy. Economic sanctions weren't used, I think, to the degree that they are now to address global issues in you know, writ large. And from there, you know, I just sort of got involved in illicit finance. I went and got a law degree, interacting, with prosecutors. Really kind of inspired me in the sense that it seemed like they had a lot of not just authority, but really a mandate to go after this type of activity. And so, you know, just slowly but surely, I wound up going over to the Department of Justice. I prosecuted money laundering related crimes, of which sanctions and sanctions evasion really kind of dovetailed nicely into that. And yeah, I mean, from there, you know, I just snap your fingers and it's been 15 years and I've been in illicit finance. That's kind of the story right there. Thank you, Ali.
I guess never a dull moment, though. You probably have a pretty entertaining job. Question from Terry on the question is if you've dealt with the IRS form 8300 and maybe your thoughts on how effective it is to help, you know, prevent, stop money laundering.
Oh gosh, I'm really glad I'm getting this question now and not 8 months ago when I was still in the government. I think the Form 8300, and I think a lot of these requirements have the best intentions behind them. I mean, I would throw SARS into the mix as well. I mean, the US government wants to be able to monitor this. The problem is having the resources to separate the wheat from the chaff. What's really important and what's just, you know, reporting because it's over $10,000, reporting because it has to be reported. When there's all of this data and information, it almost becomes impossible to really separate that out. And so if you're asking my personal opinion, I just think technology, to the extent it is not used more effectively, it needs to be leveraged, you know, running algorithms against the data that's out there, having it all digitized to a degree to where it is more searchable, where red flags are more easily noted. Because at least when I was in the government, you know, the business processes of looking through that, it would be something where if you already had sort of a suspicion, if you already had a subject, a target, if you're already looking at someone, then the different forms, whether or not they filled them out, then it became more relevant. But as far as using them to generate leads, I didn't necessarily see that as the most effective just because there was so much data out there. But that's a great question. And regardless of my opinion, it is a requirement. So there's that too.
All right, good commentary on that form. We've gotten some questions on the GTOs, geographical targeting orders, which FinCEN earlier this year renewed for many times over. I don't know the exact number over the past 5 years, and the latest renewal, the threshold amount was kept at $300,000, as you mentioned, though expanded to a few new, you know, metropolitan areas. And with the one difference being $50,000 in the city and county of Baltimore. What are potential criminals buying there for $50,000?
Oh gosh. Any reply that I'd give here would just be speculation.
That didn't need a response. It was more just a little sarcasm, but just kind of a segue into a little bit of a discussion on the GTOs. And one question from Lisa, you know, asking, you know, why not maybe require the real estate brokers and agents who structure the transactions rather than the title insurance companies who are required to provide that information? You know, do you have any thoughts on maybe, you know, why FinCEN has tapped the title insurance industry? Now, meanwhile, you know, over the past several years, they've been very complimentary to ALTA's role, and the member companies are actually doing this in helping prevent some of these money laundering opportunities.
You know, if I had to put forth an answer, not knowing this definitively, so I caveat by saying this is slightly going to be speculation, informed speculation, but speculation nonetheless. I think it probably has everything to do with aligning the interests. That, you know, the fact that the title insurance industry is more perhaps on the hook after the transaction goes through, that there's a little bit more of kind of longer term thinking, and perhaps just aligning the incentives more so with that industry, as opposed to, you know, the brokers who are looking perhaps at volume. There also could be a question of level of sophistication of who, you know, you see this by way of analogy, you know, sort of with sentencing guidelines with certain crimes. There can be modifiers that actually look more harshly at professionals in a field. So for money laundering, if you are a lawyer or you're an accountant or a banker, you absolutely could have an enhancement on your sentence if you are convicted of some sort of money laundering related crime, a financial crime. And the idea is just that with, you know, not to quote Spider-Man, but with more power comes more responsibility. And so, you know, it's really looking at a level of sophistication and who are the actors here who, you know, would be more likely to be able to identify this, and who would be, you know, more responsible, not necessarily in a who can we hold liable responsible sort of way, but who, as far as an industry, what is a more responsible industry that we can sort of task this with. That would probably be about the best level of sophistication of speculation that I could sort of give, I think, on that, without, you know, being privy to those decisions.
Yeah, yeah. Well, I mean, earlier, I don't remember exactly what month, but you know, FinCEN did publish a potential rule that would expand the GTO reporting requirements on all real estate deals.
There you go.
So, I mean, where do you think this is going there, Mike? I mean, you think that has some teeth that's going to actually happen? I mean, Alta did submit a letter, you know, recommending, you know, FinCEN develop some tailored and specific transaction reporting requirements for these transactions, you know, involving the corporate entities, instead of imposing a traditional money laundering regime that are imposed on banks.
Yeah.
But, you know, definitely a concern for our members that, you know, there could be the potential to, you know, do this due diligence on every transaction, every cash transaction.
Like, at the risk of sounding slightly flip, I think that all it will take is one instance of a designated major wealthy Russian individual buying a huge tract of land out in Montana or somewhere where the GTO doesn't apply, for this type of rule to come down. If that happens next week and it's discovered, then it'll be next week. If it's, you know, 6 months from now, then it will take place. That will definitely be a case if it doesn't come before then. But that will be an inciting event. That's really all it would take, I would think.
Well, hopefully John Dutton doesn't sell any of the Yellowstone to any Russian oligarchs. So
there you
go. Don't have any more questions, but, you know, we do have a few more minutes. If anyone has, you know, a thought that we want to pitch over to Mike. Otherwise, you know, we'll do some parting words here. Again, if you missed parts of the webinar, if you think others in your office would benefit from listening, again, the webinar is being recorded. You'll get an email with a link to the recording tomorrow, and all of our webinars are archived at alta.org/webinars. I do have one quick poll question to ask everyone regarding the ALTA registry. I'll launch that. So if you don't mind just answering if your company's, you know, listed in the registry, yes, no, or what the heck is the Alta registry? We do have, you know, more than 9,000 title agents, settlement companies, and real estate attorneys in the database now. One of the perks of it is that if your operation offers remote online notarization, you're designated with a small icon, making them easy to identify. Creating a listing in the registry is free, and there's additional incentive as being in the registry as it's the sole provider of title and settlement agent data to the MISMO e-eligibility exchange, and basically that exchange helps determine how digital a transaction can be. And let's see, we'll go ahead and close that. Looks like most people on the call still took, well, about 60% of you, not most of you, so. All right. Well, thanks for taking the poll for those who did. Before wrapping up, I do need to thank Certified once again for sponsoring today's webinar. Mike, thank you again for joining us and sharing your expertise on OFAC requirements and the money laundering red flags that you ran through.
Thanks, Jeremy.
Thank you. Take care, everyone.